What's up, guys? This is Joe, otherwise known as Catching BTC on Twitter. This is Bitcoin Watch number 11, where I do technical and fundamental analysis on Bitcoin's price action as well as set price targets and expectations for the future. It's a beautiful morning here in London, UK. I hope all of you are good that are tuning in for this video. I'm just going to do a macro perspective on Bitcoin and sort of home in on the hourly time frames, just to look at what we're sort of expecting. And we've had a pretty interesting couple of days, especially weekend at least. Bitcoin, and I think if you've been following along, this is sort of what we were looking for. Bitcoin, once it's sort of been in its accumulation period, it really likes to move quite fast. So it's just because of the asset class it is. It tends to move quite quickly, and the FOMO sort of comes along with an asset like Bitcoin. That's why it sort of tends to move quite quickly, at least in the bullish direction, and even in the bearish direction, it moves quickly. But people don't like to see that or talk about it. But let's start by putting in, we've got the moving averages on this chart, and we've had this beautiful, absolutely stunning bounce off this 100 moving averages, which is really looking for. But if you just looking back at the previous year, the previous retracements in the bull market, this is 100 moving average is just such insanely strong support. And when we really go parabolic on the high time frames. Sorry guys, the 50 moving average also offers very strong support. So, to say this retracement is over, I'd be happy in some way to say it just because of this really nice touch of the 100 moving average. But, trade carefully. It does not mean this retracement's over. We'll more than likely get one last sort of dip down once we sort of top out on this move because it's sort of an infant move at least. So, yeah, so I mean that's just a quick overview of what I was saying. If we go back on this is my macro chart, which is funny because I actually drew this. I mean, as you can see, I drew this chart back in. I mean, if the Elliott waves are here, I sort of drew this back in May. I'm sure this is on a Bitcoin Watch video, and I definitely know this is on my TradingView profile, which is here. If you guys want to subscribe. Plenty of interesting theories and all that kind of stuff. It gives you a good overview of the markets. Yeah, so we're going to go back here and we'll look at this BLX chart. It's the Brave New Index Brave New Coin Liquid Index for Bitcoin. It basically takes all the indexes from all the different exchanges, sort of averages them out, so you get a really concise average price of what Bitcoin is actually trading at now across the exchanges. So I'll just delete these Elliott waves, make the chart a bit cleaner. I didn't really want to have this chart on here, but we'll leave it on there because it's a good, some people say trading is gambling, but how can I make this chart 4 months in advance and know where to sell and where to buy, if you know what I mean? So it's like, look, I mean, if I look at these price targets here, we topped out here, sold off, topped up at the top of it again, sold off. Massive move up here. I had my big take profits, my macro take profit targets were here and here. Smashed them. We barely even, we really touched the liquidity in terms of the sell side up here and came back down. So, that's just a great indicator that you should really just trade slow, set nice future price targets and just stay calm. But I'm just going to talk about this 100 moving average a bit more and go back into the past. I have touched on this in a few videos, but we'll go over it again because it's always good now that we're sort of out of this retracement. People give a good idea. So the bottom out of this 2015 bear market, which is really the closest bear market we have for comparison, if we look here, so I've still got some notes on this chart. So we broke out this 200 moving average here. So for us, this would be the 6K price level would be here. So we smashed it, came all the way back up, came back down, tested it. We didn't get that test in this bull market, but we got a close enough test around about here. And as soon as we sort of broke out of the 200 moving average, you can see that this 100 moving average just offers such insanely strong support. Even if the market just slows down and sort of moves slow at this 100 moving average, it just offers such strong buy support because you've got the trend traders, you've got institutional buyers wanting to support the trend that are buying on the dip. There's a 100 moving average here, and surprisingly, this if you think back to 2016, I don't know if any of you really follow the stock market indexes, but in 2016 we had quite a significant sell-off, and a lot of skeptics thought that was it. That was the the end of the bull market in stocks, but it definitely wasn't. I think we've gone up at least 40% since then. It's probably a whole lot more than that if my brain does me well. But I mean, again, so just going back, look at this. As soon as you've broken out, there's a 100 moving average here. This is you really shouldn't pay attention to this. This is just like when you're in an infant market, you tend to get these huge price wicks just like here and here, and we still get it now. It's just that they're dulled down quite a lot just because of the market cap, and with the growth in market cap, that's what you'll expect to see. So there's a 100 moving average here, beautiful test, 100 moving average test here, 100 moving average test here. We get a 200 moving average test here, which we may even get in the future. Nobody knows just yet. And then after that, we don't even touch below the 50 moving average for at least a couple of months. Coming to September, where we get this dip into the huge moving average, 100 moving average, sort of touching on the 200 moving average, keep moving up. And again, as you move up again, 100 moving average test, 100 moving average test, it's a very strong support, and you should not underestimate it. So the fact that we sort of come here to the 100 moving average and had such a strong rally straight after really signifies to me that this might be the end of the retracement. We've got this beautiful. Let me get on this chart and sort of look. So if any of you know about bottoms or you study chart analysis quite often, this is a Adam and Eve double bottom. So basically, an Adam and Eve double bottom is essentially you get this. Hold on, guys. Let me just get my tools. So basically, an Adam and Eve bottom is basically where you get this Adam. So if you guys could sort of picture this, I'm not sure if I can get. Oh, I can actually. I can make this big enough for you guys to see. Hopefully, I can't rotate it, can I? Anyway, so if I can I rotate it? I'm not sure TradingView offers that. No. But if you imagine this A was turned upside down, hold on. So you sort of get this Adam and Eve bottom, and essentially, if I could rotate these letters, this would be the A coming down here. You see, it's quite sharp, comes off quite strong, and then if this E was turned upside down, you sort of get this this curvature, this nice smooth bottom. I mean, you can refer to that as Eve as however which way you want. I'm sure people take that the wrong way, but let's not talk about that. So yeah, so you get this really strong first spike of this test of this accumulation zone, this liquidity pool. You come back and sort of trend towards it and get this slow sort of market bottom here, and this would be an Adam and Eve double bottom. So if you were trading technical charts, that would really signify the end of this retracement for you, or at least signify a position, sort of a break above the neckline, which would have been about there, where the 50 moving average and the 15 moving average are. And that's also another good thing. We're already trading above these two moving averages, and as soon as we start sort of trading above them, we start to get pretty strong moves. So if we look here, when we've broken above them and moved up here, we get this little test of 50 moving average, and then it really is quite quick for quite a long time, and we don't get a test of some of the deeper zones for a while. So it would be fair to say that we might actually start moving quite swiftly now. I still think maybe one last trace of this move. I'd love for it to top out at 12K and sort of come back down to the 618 to test these 50 moving average, but we might just get a 382 retrace of 11K. But anyway, yeah, so that's sort of just some historic analysis on Bitcoin. But let's put in some trend lines that we should be looking for. So this will offer some sort of resistance, but I don't think you guys should be looking for this as a sell target at all, as it will be broken through most likely, and it's really not that interesting. But I will touch on this trend channel that I touched on in the previous videos, which gives us a really nice idea of sort of bullish sentiment. So I'm not quite sure where the bottom of this trend channel I drew was. I'm not sure if you can even get it on this chart. I guess I'll just put that there. So I can draw this tool. If you guys want to draw it, I believe you can use a regression trend, or there should be a parallel. Oh yeah, there you go, parallel channel. Where's that just gone? parallel channel. Not really good at these, unfortunately. Yeah, so you sort of get this sort of channel. And if you had to have a trend channel, the fact that we sort of bounced off of this middle trend channel line just shows how much buy pressure that trends offer, and that they're really not something that you guys should take lightly. Although on the local time frames, they really don't mean a whole lot. They do mean something, but they just won't offer the sell support or buy support that you guys are probably looking for. I'm much more of a macro time frame trader because it's a much more high probability trading, and there's a lot more money in it, in my opinion. It's a lot more safer strategy. So, this buy pressure, this trend channel, we bounced off the middle of this bullish trend channel. Just to clarify, it's a bullish trend channel. It's constantly moving up. The price is going up in it. And we've bounced off this middle, and we're already trading quite significantly higher. So have a look, trading 30% above that trend channel. And if we look at the top of this move, and we go to where we are now, we're only actually down 14% in 2 months. That's really nothing, and I'm sure that figure will be 0%, if not minus 100% in a couple of weeks. But anyway, looking back at the chart, beautiful bounce at the middle of this trend channel. Now we're coming up to test the upper bounds of this trend channel, and at this upper bounds there is quite a lot of sell support, and this is where we're going to step in on the closer time frames. Have a look now. Go on the 2 hour and sort of just see what we're looking for. So I'm just going to delete this, make it a bit cleaner. I'm going to delete this. No, I'll keep that there just because it does offer a bit of support for us. So if we look at this, there's also a downward trend line, downward bearish channel coming in here as well. So this will be interesting to see how it plays out. So we're really coming up on quite significant resistance here. I drew this on the chart here quite a while ago. I mean, where was this? August. So it wasn't that long ago. It wasn't that long ago at all. Probably a couple of days ago. That this was the first real area of resistance that you guys should be looking for. This 10 to 11k, and there was a trader in there, Oscar, I think, that took this trade and got out most of his position here. He wasn't greedy. That's exactly how he should be trading. He should not be greedy, because realistically anything could have happened here. We could have sold back down here. We could have spent a couple more weeks in accumulation. So you've got to get in, take your profits quick, get back out, and at the end of the day, it's all about accumulating more capital. And the more capital you have, the more profitable your trades can be, or the more money you can make from your trades, which is exactly what we want. Anyway, so he got out here, and I said, it's best to get out here, or at least hold 20% of your position and wait and take most of your profits here, because this is where the higher sell pressure will be. And if we go on another chart I drew, this is really what I was looking for. This is the safest RR long position play. We wait for this break above here. Any sort of retracement you bought once we broke above 10.2, and Oscar did, that's what he traded, and he took out of his profits here, which is such a great trade. As I said, cut most of the position here, hold out until this next sort of resistance, and this next resistance is from 11.9 to 12k. I'm sure my other chart is the same, 11.9 to 12k. And now we're sort of getting really close to those price levels, and we'll start to see what happens. So I'm just going to sort of do some technical analysis here. So when drawing horizontal resistance and support, you've got to be looking for market turning points, where the most market turning points have happened. And by market turning points, I mean, where is the short-term trend change direction? Where is the long-term trend change direction? It means you sort of have you see these big moves in price. And if we were to look on this chart and look for the quite significant where we're trading now, obviously we have this top here. We've come here, tested it, and we've had this quite significant short-term trend direction as we were moving up here, and then bam, back down. We go across here, we've had this other market turning point here, and come up here, sold off quite significantly, short-term trend reversal. We traded back up through it, but it's offered quite significant sell resistance. And same here, you sort of got these two here coming into the same zone, a bit higher up, and we've also got these two wicks here in the same sort of zone. So, looking at this price level, that's where we want to draw the horizontal support and resistance, because that's where the most liquidity is, the most sell side liquidity. And if it happens here, most traders want to be taking profits the next time we test this same channel. So if I just draw some resistance here, I'm actually going to get some fib levels in here as well, because it helps. When drawing horizontal support and resistance, you want to get as you don't want to get as many technical indicators, but you want to get the tried and true technical indicators. And for me, that's moving averages, Fibonacci, and just basic liquidity pool theory, which is what I've just shown you there. So we've got the 618 here, keeping it simple. Markets like to trend towards the 618 on any sort of direction, whether it's bearish or bullish. So the fact that we've got all these market turning points in here really would give me this sort of zone, 11.9 to 12.1 to 12.2. This is what I've had in these charts the whole time, and I'm still looking at the same thing now. So we'll just put a rectangle here, sort of highlight this zone of where we expect a reaction. And not only this, but we also have this trend coming in from these two highs in here to offer even more sell pressure. So realistically, you know, I'm expecting a fairly significant reaction here, but if we slice through it, you know, I will probably be buying any retest of this trend or any sort of retest of this. Well, I probably won't, because I kind of want to see it break a bit higher first, so I don't recommend that trade. We've already very overextended on the local time frames from the buy pressure that we've seen here. We've had little to no sell off here at all, so you can tell that buyers are sort of wanting to get a higher price to sell at. So we should expect a fairly sizable reaction here. And you know, I'm not going to show. I mean, if we drew the higher time frame resistance, I mean, there isn't a whole lot. You know, as soon as we break this 11.9 to 12, it's going to move very quickly, And if I go on my chart here, this is the chart that I traded. This is in June 27. As soon as we topped out, I drew this chart, and this is where I wanted to accumulate spot Bitcoin. I've sort of been holding this. We play it out, you see how beautiful it plays out. So I actually took a leverage trade here. I'm sure if you follow my Bitcoin watches, you'll know I took that leverage trade here. I never take the same trade twice, because the probability that we're going to double bottom in the same thing is very low. It's a low probability chart pattern. So, you know, you really want to get in on the trade, and you don't want to take it twice. So my first leverage trade was here. I took the profit at the highs here, didn't take it up here. And then I just accumulated spot Bitcoin whenever these hit sort of my price limits. My stop was down here. And now I'm sort of looking for 13.9, 17.4, and 20,000. So I'll just take you through sort of why I'm looking at those levels right now. Well, in a sec. But if we put some Fibonacci extensions as well, looking at the buy pressure that we've accumulated here, so we've got two highs in the same place, so I can actually just draw one Fibonacci extension for this. Again, the 618 is coming into this horizontal liquidity zone, liquidity pool here. We've got the 618 here, 1.618 here, 3 market turning points, a trend channel. So again, guys, it's about finding the areas where the highest probability of the market turning around is at, and that's here for me. You've got fib confluence, market turning points, trend channels, all that kind of things. And so realistically, if you know you're a smart trader, you're a conservative trader, you will be out of the market coming into this zone here if you're not already out at this 11k zone. Yeah, so I mean, now sort of coming into here, you know, I do expect a retracement, and if we're expecting a retracement, I'm sort of working off the same levels that I targeted, you know, around here. We've got these, again, we'll just quickly go through market turning points. We've got a market turning point here, market turning point here. I've got a whole lot of fucking market turning points here. Okay, you can see how many wicks are in there. So this is really where we're going to find that support, and we've also got this macro 382 from this whole retracement. So if you sort of look where people will be entering the market again, or to at least continue this trend, we're really looking here. So if you wanted to take, if you believe this is, for me, you know, the fact that my position was the first test of this here, and I took that trade, got out at 11k, and I'm out of the market by most of my trade now, and I'm not trading it because we are quite overextended and nearing a resistance, and you never want to buy into resistance because that doesn't make any sense at all. Yeah, so really, you know, I'd really love to see, you know, if we draw a fib here and we sort of top out at the top of this zone, you know, there's this 382 in this zone, which is, again, I've touched on in so many videos. When you're in like a bullish market and you've changed trends, you want to be looking for bullish continuation on the 382 or the 236. And for me, the 382, I always trade 382 if it's a stronger place. We've got this fib confluence here, 382 here, and the macro 382. So for me, you know, I'm a buyer here, I'm a big buyer here. We've got this really strong liquidity pool, and we've topped out here, and it would be a nice place to go long here. It would be a nice place, but you have to remember that we are overextended, so it's perfectly possible that we might even come back down to test this 618 and the 2836. But you know, again, that's just what comes in with trading. You can take, you know, the risk reward is high on this because you'd be taking profits at this pool here and the next high here. So if we look at what are that position, sort of the risk reward on that position, you know, I'd be cutting profits. I'd be cutting the position around here. So coming into here, and I'd take profits at this pool here, and look, we've got a four to one risk reward trade, which is an absolutely fantastic trade. And I never like saying this, but if you really did want to risk it a bit more and sort of on this entry, you know, pull your stop down below the 618, below this, you know, liquidity pool here, this buy liquidity pool, because of the market turning points. 1 market turning point, 2 market turning points, 3 market turning points, 4, 5, 6. We've got the 236, the 618, and another 618. So the fib confluence here is just so strong that again, like that would I wouldn't see us breaking below there. And then we extend that down. We've got a 2-to-1 risk reward trade, which is absolutely what you guys should be targeting. Minimum, your trade should be 2-to-1, if not 3-to-1. You know, if it's any lower than that, there's no point in taking the trade, in my honest opinion. So, you know, these are sort of zones I'm looking at now. You know, if I'll go over the macro sort of targets now. Once we break past this zone, you know, if you were taking this long trade, I'll just remove most of these trend channels, because if we break above this trend line obviously isn't really going to offer much in resistance. You know, the next sort of price level you'll be looking at is, let me just get these charts in. So we've got this fib extension here. We've got the fib extension from the high here. In fact, I'll just do the thing here. So again, guys, so if we look for fib confluence here, the 1.127, guys, don't ignore that on my fib. I use that for the stock market. I don't use this for Bitcoin. It's quite, you know, I haven't seen any confluence of it on this in this market, so don't really target it. But anyway, so on the local buy pressure, if we look on the local buy pressure, we're looking for the 618 again. So, you know, I've just gone through that. So if we break over that, the next sort of area to be looking at is 14K. And if we sort of come out a bit to see the market turning points in the bear market, let me just take this thing off so we can see a bit better. So we're sort of looking for 14K here. So we go back over here and sort of look at what we look at the wicks here. Sorry, I want to go lower, not higher. Okay, so right, so it's 14,400. Let's look at the 14K to 14,400 level. So I can already see a pretty significant zone. You know, we've got 1 market turning point here, 2, 3, 4, 5, and again, I'm sure you guys get the idea. So if I was drawing it off here, you know, I'm skeptical. I don't like using this sort of 2-year-old analysis, technical analysis of market turning points, because it becomes a lot more relevant as we get closer to it, and we have built price support and resistance in the local time frames. But you know, if we come here and we sort of chart this resistance zone, hold on, let me just get this straight. You guys can see that. I hope you guys can see that. You know, you can obviously see that this has offered much in the way of, we've broken above it, offered buy support, broken up, broken below it, tested it, skyrocketed back down. So obviously this is going to be something we're looking for over here. But just pull this over here. And what do we have here? I mean, it's not a coincidence. This is how markets work. It's not a coincidence that the 2.618 from the buy side liquidity we've accumulated here is in this liquidity pool. There's no surprise to me that it ends up in that liquidity pool, because that is just how market is. The beauty of markets. It's nobody can figure it out really. There's no reason for it, but there is reasons for it, but it's quite a coincidence. It's not a coincidence that they end up in the same zone. This is a point in the market which is right now it's high on the sell side liquidity. So sort of macro targets, you want to be out at this high here because it's coming close in, and then you want to be completely out by this 2.618. Because when you trade these extensions, you're trading how far the market has deviated from its initial liquidity accumulation, if that makes sense to you guys. So we've accumulated all this buy pressure here, and the furthest extension from this price level accumulation is this 1.618 and 2.618. And this is where people are going to be taking profits, because we've deviated far enough away from the mean for people to be comfortable to take profits. Sort of we're overextended, and when you get to 2.618, the whole move of the buy pressure here is sort of overextended, and then you'd expect to have a retracement to accumulate more buy pressure to then get a further deviation from the mean. But sometimes that doesn't happen. Sometimes you move straight to the 3.618, which is probably what's going to happen here. We're going to move pretty significantly quickly. But again, looking on even more higher time frames, coming up in here, we've got this 1.618 of this whole move down. So this will offer some pretty strong resistance. And if we go back over here, it's bam. This isn't magic, guys. This is just how markets work. If we look in this zone, look, massive turning point here. 2 market turning points. 3, 4, 5, I guess you could say. We've got this little test. We come down here, test back up at this pool, straight back down. So if I were really to draw, and I think you guys have to sort of realize is that you see how the size of these liquidity zones sort of change. You see, this is quite small. We can target this quite finely, and this it becomes quite large, and the wicks become quite large, and it's harder to pinpoint exactly where the market will turn in this zone, because these are such new, fresh price levels in 2017. No one really knew, so you get these huge price swings, huge price. I mean, back in 2017, this market was so parabolic. We had so many new entrants, so many institutional buyers, like FOMOing in, people dumping on the retail buyers, and you just get these huge price swings. So this is just what happens when you're sort of nearing super overextended price levels, which is what 20,000 was back in 2017. Super overextended. We traded from $500 per Bitcoin to 20,000. Okay, so when we sort of start to top out, you see these huge price swings, and that is when the liquidity pool starts to become a lot more large. It becomes larger in terms of the price zone that you're looking for and targeting. So, but still, if we come over here, we've got this 1.618, 3.618 in this zone. So in terms of times you want to be out of the market, it's got to be, if you're in a long position here, you want to be out here and out here if you're in a short-term leverage play. Obviously, if you're in a spot play, it's a bit different, but I would still be taking profits at this 1.618 here at 16,000. 100%. I would not still be in the market by that point. And again, the 2.618 is sort of just overextending this high here. If I was in it, I'd be taking profits at the high of the 20,000 of Bitcoin, and I'd be out at 16,000. So, and that's the trade that I'm taking here. If we go back to my trading view profile, look, out here, 16,000, and out at the high here. And I'm also out at the high of this retracement, because we might get a double top. There's no way of knowing. You have to play conservatively, play profitably. That is how you trade. Okay, there's no way that you're going to know where the market's going to turn here, here, or here. So that is why you set these price targets and you take profit out. Exactly, guys. So I mean, it's a beautiful trade. Take profits here and just be careful. So that sort of finishes my sort of overview of Bitcoin and sort of some expectations coming up in the future and sort of price targets you should be looking at. I hope this is a really informative video. We went over quite a lot of things, moving averages, targeting liquidity pools, I'm just looking at some extensions and deviations from the mean. But anyway, I hope you guys enjoyed that. I'll see you in the next one. Thanks, guys.